Hi guys, Hiran Nori here, co-founder of Sublime Trading, here with an update on the US and UK indices for Monday, the 7th of September. Alright guys, hope you're well, hope you had a lovely weekend. So, last week, interesting week, Thursday, Friday, we saw that much anticipated and actually much needed pullback in the US market. So let's start with the S&P 500. We know that the S&P 500 has been trading above the previous all-time high of February of this year for a number of days. What it hadn't done was pull back and retest that level as support, and we actually saw that on Friday. We saw the pullback start on Thursday, then on Friday, which was also NFP, we saw further weakness. Price actually at one point during Friday broke through that level of support, was trading below it as resistance, but closed above it by the end of the day. I've mentioned it numerous times. I mentioned a couple of things numerous times actually. First and foremost, whenever an area of support or resistance is broken, always expect that to be retested. And we want that to be retested. It's healthy for the trend and for the market, for price to pull back, retest those levels. So for example, in this case, the previous high of February as resistance, to retest it as support before we then see the next leg up, because the further price moves away without a retest, the more aggressive the pullback. And Thursday and Friday were pretty aggressive pullbacks, but let's put some perspective on these pullbacks. So if we look at the S&P 500, for example, since the low of March, from the following the recovery from COVID-19, we've seen a 60% plus rise in price. On the Nasdaq, we've seen an 80% plus price rise, and on the Dow Jones, again something similar, around a 60% plus rise in price. If you look at the pullbacks from last week, Thursday and Friday, in comparison, you're looking at around a 5% pullback since the start up until where price closed on Friday. So the start of the pullback on Thursday up until the close on Friday, you're looking at around a 5% pullback. So you've got to really put this into perspective. If you look at social media, if you look at any of the groups that you may be a part of and conversations that you may be having with other people, you know, there's always just a lot of fear and a lot of chaos whenever there's a pullback in the market. But every trend is made up of pullbacks, and you've got to expect this as an investor. Every time a pullback comes in, if you start panicking, then ultimately you're not in line with how the markets move. And to make consistent wealth and to consistently grow accounts, and also to have a good time doing it, i.e. not panicking every time it happens, you've got to really align yourself with how the markets move. Now, there's no guarantee that these support levels would hold, of course, but this is where risk management and stop losses come in. But ultimately, for now, what we saw last week, Thursday and Friday, nothing more than a pullback until price proves otherwise. That's the same on the Nasdaq, same on the Dow Jones. We've just seen pullbacks. What we want to see now are breakout, and particularly on the S&P 500, we want to see the breakout of the current high to suggest a continuation. Now, when that happens, it's really down to price to suggest that. Looking at the UK market, the FTSE 100, we're already seeing a recovery, a fairly bullish day already. Some of the stocks that we're in, PCT, SMT, they're already showing signs of bullishness and recovery. So we've really got to see how price plays out. This is really where patience comes in, and where the psychology of good investing comes in. There's always a lot of talk about psychology, but a lot of people don't really understand what good psychology is. Psychology really is applying patience, being in tune with the natural movements of the market, allowing price to dictate how to act, and not sort of guessing what market's going to do next, which is where a lot of people go wrong, trying to predict what the market's going to do next, when really you want the market to dictate and then for you to react accordingly. So that's really our stance for now, guys. We're just going to hold, we're just going to apply patience where we are in terms of our positions. Very much bullish. We've got stop losses in play, we've got risk management in play. Any further weakness, and then we'll of course manage our positions. But for now, we'll be going in line with the overall market direction, which is very much bullish. Also, guys, in case you are unaware, it's a bank holiday in the US today, Labor Day, so the US market will be closed. Alright guys, that's me for today. Don't be selfish, guys. Please like, comment and share. Let's get people understanding how to use these indices correctly to build really good investment portfolios. And I'll be back with another update sometime in the week.